Gold. The ultimate safe haven. XAUUSD has been an absolute roller coaster, hitting new highs and then seeing sharp pullbacks. Is this the end of the legendary gold rally? Or is the yellow metal simply refueling for the next monumental surge? Today, we cut through the noise and reveal the three core fundamental drivers that will dictate gold's price movement in the coming weeks and months. The biggest short-term volatility driver is always the US Federal Reserve. Gold is a non-yielding asset. When the Fed keeps interest rates high, holding gold becomes less attractive compared to high-yield treasuries or savings accounts. This is called the opportunity cost. The recent price pullbacks, they were largely driven by the Fed hinting that rates might stay higher for longer. The key is this: as soon as the market firmly believes the Fed is done hiking and will start cutting rates, the opportunity cost disappears, and institutional money will flood back into gold. This Fed pivot is the short-term bullish catalyst everyone is waiting for. Next, gold has always thrived on fear. The second major driver is geopolitical uncertainty. Conflicts, global trade wars, and political instability. These don't just create fear, they destroy confidence in fiat currencies and traditional markets. When things get shaky, investors revert to gold as the ultimate safe haven, while recent de-escalations can cause temporary dips. The current level of global fragmentation is a strong structural floor for the price. As long as uncertainty persists, especially against a weakening US dollar and risk-off sentiment, gold's safe haven demand remains a powerful anchor supporting the XAUUSD price. Finally, let's talk about the force driving the multi-year rally: central bank demand. Global central banks, particularly in emerging markets like China and India, are buying gold at a record historical pace. They are diversifying away from the US dollar as a reserve asset. This is a massive, structural, long-term demand factor that acts like a gigantic vacuum cleaner, continually pulling supply off the market and setting higher lows for XAUUSD. This buying is strategic, not short-term trading, and it signals a fundamental long-term shift towards gold. So, what's the outlook for the next few months? While short-term volatility around Fed comments is inevitable, the long-term fundamentals remain decidedly bullish. The major forces: geopolitical risks, the eventual Fed pivot, and relentless central bank accumulation are all pointing upward. We are likely seeing a healthy correction that attracts new institutional money. The key is to watch the interest rate narrative closely. When the narrative shifts from higher for longer to rate cuts are coming, get ready for gold's next big leg up. What is your price target for gold by the end of the year? Let me know in the comments. Don't forget to like and subscribe for more fundamental market breakdowns.